Hey, I'm Doug Goldstein from the Goldstein on Gelt show. You're going to love the interview I'm about to play for you with Bert Mouler. He specializes in artificial intelligence related to trading. He's one of those guys when they talk about really, really fast traders. Well, actually not really, really fast. He says his trades sometimes go in under 10 seconds between a buy and a sell. I thought that was fast, but there are actually people who trade in split seconds. One of the topics we talk about, which is really going to be important to you, is if you're one of those people who cares about robo-advisors, you would think that someone who's very much into technology and artificial intelligence would support people investing in robo-advisors. But quite frankly, he comes out the opposite. I think you'll really enjoy this interview. You'll find out, first of all, how the experts today are using AI, artificial intelligence, to become better investors, and why they suggest not using robo-advisors, and what they suggest instead. That's all in this interview that I do today with Bert Mouler here on the Goldstein on Gelt show. Okay, I'm very excited to be talking with Bert Mouler, who is the head of Profluent Capital. He deals in algorithmic trading. This is very different from the types of trading that I normally deal with, which is more fundamental in nature. In fact, Bert, Warren Buffett was telling me the other day how he likes to look at the basic business of a company. No, I'm just kidding. It was about 6 months ago that he was telling me. No, I'm actually still joking. Let's start. Tell us what algorithmic trading is and why you go for that.
Well, essentially, my personal belief, for example, a lot of Daniel Kahneman's work, I'm sure you're aware, talks about how humans are fraught with biases and they aren't really able to make decisions in the face of uncertainty and random distributions properly. In fact, their decision making is worse than random. Mm-hmm. So there's persistent biases that make people make incorrect decisions. And so we instead use computers to make those decisions, specifically in the investing and trading arena.
Interesting. Daniel Kahneman actually told that to me. He was a guest twice on the Goldstein on Gelt show. People can look that up at YouTube. Just look up Goldstein on Gelt and Daniel Kahneman. The interesting thing about it, I'll tell you a little side story about Kahneman. When a few years ago, I worked on a book about how the strategies of chess could be applied to investing. And my co-author, Susan Polgar, is a world chess champion. And we actually spoke to Kahneman about our ideas, and he was very interested specifically in what you said about how the behavioral finance that he studied in finance applied to the chess player. So he ended up reading the first chapter of our book to give us a review, which we thought was very exciting. But in the end, his discussion and his criticism was not about our behavioral finance, but about our chess analysis, which was pretty funny because Susan's very good. But he also didn't conclude you need computers to make the decisions. Why do you feel a computer could make a better decision than a person?
Well, there's two aspects here, right? So I actually agree. You don't need a computer, right? You just need to be extremely self-aware, right? So I'm not sure that the regular investor is willing to put in the time to get himself personally, intellectually to a place where he can make those decisions objectively himself. That's the one side. And the other side, that is more related to our trading personally at the firm, is speed, right? So we have computers running 24 hours a day, 7 days a week, making trades, sometimes with an average holding period of under 10 seconds. So it's very difficult for a human being to sit there and make repeatedly thousands of trades a day without making any mistakes and without getting tired.
So you're one of those people that they write articles about. Your goal is to get as close as possible to the exchange because literally the speed of light slows you down?
I don't like to compete on that scale because I don't believe that it's a good use of resources to spend money on speed, because someone can always outspend you. So we compete just above that level on smarts, or at least that's what I like to believe.
So when you write the programs to do whatever sort of trading you do, aren't you actually putting in your own personal biases?
You are absolutely correct. And that's why we don't write any programs ourselves. We use machine
You outsource it to India.
No, we use machine learning and artificial intelligence to write the programs.
That sounds like the people who advertise robo-advisors. They talk about that too. Is that the space that you're looking to go into or that you feel you're in?
I don't feel that we're in that space. I do feel that pretty much 100% of the people offering robo-advising services are, let's say, either a little bit confused themselves or not being 100% honest about what they're doing. There's almost no machine learning and AI in almost anything that is offered to the retail investor. In fact, I just did a talk in Chicago about machine learning for trading. And I think many of the participants were disappointed because essentially both me and the speaker after me told them that there is almost no machine learning for trading in the sense that, we launch a program and it learns from the market data and goes out and trades on its own. There's a lot of there's a framework that needs to be there that most people in the machine learning space that aren't in trading lack. You can't just, run a price series through a neural network and have a trading system.
We're talking to Bert Mouler, who is the head of Profluent Capital. He is a designer of intelligent portfolio management. And Bert's been talking to us a little bit about how people often make mistakes when they try to manage their own money because of their own emotions getting in front of them. Also, he's been talking to us about robo-advisors, which is really interesting because it seems to me, Bert, that's a growing field. And you're saying that the robo-advisors don't use artificial intelligence. Let's get down to some basics. When you talk about using artificial intelligence to make a program that's going to trade your money in literally seconds flat, what is it that you're doing that's going to make this machine actually learn so that if it makes one mistake, it won't make it again?
We use a variety of known and unknown, ones that we developed ourselves, machine learning algorithms. But in general, it's not the machine learning that does the trading. It's the output algorithm, which in the end needs to be very simple, as in, like Occam's razor, right? So the most profitable trading systems that we have are by far the simplest. Something like, buy on Tuesday, sell on Wednesday, plus a couple of bells and whistles. I know that maybe sounds very, very simple and very unlikely, but, go and test it.
Mm-hmm. So you're constantly testing theories like this, or your computer system comes up with as many different possibilities as it can and then tests them and then decides if it's worth putting money into it?
Exactly. Except it's not me again. It's the computer doing all the work. We do choose which assets to run it on just because we have, external knowledge. You don't want to have a portfolio concentrated in biotech stocks, for example, even if it's just trading systems. You want to have a diversified portfolio no matter what.
Uh-huh. So that's interesting. So it matters to you what asset class you're trading?
So we're asset class agnostic in the sense that we can trade any asset class, but we would like to be diversified just because there's systemic risks that are present. If you're only trading, long U.S. stocks, then you're exposed to the, long U.S. stocks, exposure. So if you have a downturn in the U.S. economy and you're long only, you're less likely to make a profit.
Mm-hmm. I want to go back to this topic of robo-advisors because I think that a lot of people see this as an ultimate goal for managing money. They say they accept the fact that regular people shouldn't be trading on their own, and they say that the robo-advisors automatically diversify. They'll do tax loss harvesting if you need. They're able to invest in markets or just more broadly than the average person would ever think of doing. Why do you think this is not a good idea for just regular people?
Well, trading in general is based on the premise that there are inefficiencies in the markets that can be exploited, right? So basically, in a world where there are no inefficiencies, I mean, I don't know if that's possible, but theoretically, the best thing to do would be to index, not to use a robo-advisor. And what we're saying is that these inefficiencies are so huge that someone with $100 billion in a very simple strategy can make money off of these inefficiencies for a long time without those inefficiencies ever dissipating, which is unlike my experience and the experience of my fellow traders and people in the business.
Well, to clarify, you're doing trading. So I accept the fact that if you're buying and selling, you're not looking for real value in something. You're looking for the trade. Whereas someone who's a long-term investor, you're advising maybe would use index funds, but the long-term investor is not looking for inefficiencies. In fact, the long-term investor is really looking for long-term growth in the world economy and figures that in 10 years, things will be better than they are today.
I agree. That makes sense. And again, that's why, in my opinion, an index fund would be much better than a robo-advisor because active management is hard to do because basically when you're an index fund, you're not competing with people like me. When you're a robo-advisor, you are competing with people like me.
But even when you're looking to go into indexes, there's so many that are out there, hundreds, if not thousands. How is again, the average investor supposed to decide which index to buy?
I would go with the more popular one, right? Because that's the one people are going to bid up when things are good, right? The one that's most diversified, the one with the highest market cap. Investors tend to care less when they lose together than when they lose and everyone else wins.
Interesting. All right. Well, hopefully everyone's going to be winning. And we certainly have won a lot of great ideas by talking to you, Bert. Listen, in the last few seconds, tell me, how can people follow you and follow your work?
So you can reach us at our website, profluentcapital.com, PROFLUENT capital. My email is BM, like Bert Mouler, at profluentcapital.com. I have a Twitter, bmouler, same thing, and LinkedIn also as well under Bert Mouler.
All right, we will put links to all of that at the show notes of today's show at goldsteinongelt.com. Bert Mouler, thanks so much for taking the time.
Thank you.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Check out all of Doug's money ideas at goldsteinongelt.com. Doug specializes in helping people who live outside the United States handle their U.S. investment accounts. If you have a question that you would like answered on the air or off, contact Doug at his website or send him an email to doug@profile-financial.com.